Alright everyone, welcome back to the channel for another Kadena update. In today's video, I want to talk about what's going on with the KDA USD price. I want to talk about my prediction that I've been having from the last video from the past couple of weeks. Do I still think $1 is on the table? But more specifically, I want to start off with how Kadena is performing against Bitcoin. I know most people aren't necessarily interested in how it's performing against Bitcoin. They care about, when is the time to buy against the USD, what price is it going to on the USD pair. But what I see happening on KDA USD, or KDA BTC rather, I believe is going to be a leading indicator of what we are soon to expect to play out with KDA USD. With that being said, let's jump right into the chart. So, starting off with Kadena's performance against Bitcoin. Now, if you're new to the channel, first of all, warm welcomes, but you might be wondering where is this Fibonacci drawn to? On the weekly time frame, it's drawn to nothing, but we are drawing this trend on the daily time frame. As you can see, it correlates to the candle body closes on the daily. With that being said, let's delete that and hop right back into the weekly. So, as you can see, at this moment in time, the trend is best defined by the weekly time frames from the lows to the highs. We have broken below the 786 Fibonacci on the weekly time frame. This was invalidated on the week commencing the 23rd of May. Once we consolidated and put in that weekly candle body close on the 30th, the trend was invalidated to the upside. And it has only been a couple of weeks since we did invalidate this trend. And since then, in the past week, we have subsequently pumped. We've had a pretty decent rally on Kadena against Bitcoin. A lot of the altcoins have been either holding break even, some of them have been moving up against the US dollar, while Bitcoin has been stagnating / moving lower. So this is basically why we've seen this move of 52% on KDA against BTC. Obviously, this is commendable performance, but I would like to highlight we saw the exact same thing here. We saw it here. We saw it with this wick. We saw it with this wick. We saw it with this wick, we saw it with this wick, and even zooming out to the all-time high, we've had tons of blow-off wicks to the upside. Now, I don't necessarily think this is going to be something that's going to wick up and close with a massive wick. I actually think that we're probably going to lollygag for the next 24 hours or so, up until the stock market opening of next week. But as you can see, at this moment in time, sure, we could have a moonshot. I don't have a crystal ball or anything like that, but I would like to highlight the trend is your friend until the end. The weekly EMA ribbons on the KDA BTC pair look like they're about to flip bearish, which would be indicative that we're probably going to take another plunge to the downside. We are running into the 786 Fibonacci resistance in terms of the micro Fibonacci from our most recent low to the high. We're still below the 0.5, we're still below the 618, and we're still below the 786. We're below the weekly EMA ribbons. We're running into weekly, macro resistance that's been in place since basically the all-time high, 1st of November. All-time high was at the 8th of November. As you can see, we're running into some areas of pretty nasty resistance right now, and as such, I do think KDA is probably getting ready to break down in the next week or so, coming back down to these lower valuations against the Bitcoin pair. Now, I'm not necessarily so pressed about what happens on KDA BTC. I would just like to highlight that I do think this is going to be a leading indicator. If we do initiate the dump on the BTC pair, we're very, very likely to continue on the dump with the USD pair. Why is that? Because I think BTC is going to go down against the US dollar. So if KDA is dropping against BTC and BTC is dropping on its US dollar valuation, then that should be a leading indicator that KDA USD is going to have a mass capitulation. And from where we are at this moment in time, I do think it's likely that we push down to the $1 mark. This is my most conservative price target for KDA. This would represent about a 40% drop. Now, bear in mind, you might be thinking, this guy is super bearish. If you're new to the channel, you might be thinking that's way too much of a bearish price target. But if you go back to my videos, I've been covering KDA since the 8th of April. And the OGs, the veterans of my channel, have known that I've been telling people religiously, do not buy KDA. I've been saying this since $6.50. I've been saying it since almost $7. I've been saying, this is not forever. The trend is your friend until the end. Since $6.50 or $7, we've constantly been getting battered again and again and again against the daily EMA ribbons. I'm not saying I'm never going to buy KDA. I'm not saying it's a bad project. I'm simply saying the trend is your friend. And at this moment in time, all we keep on doing is getting battered, battered against the EMA ribbons, and even within the past, week or so, you can see came up into the EMA ribbons, got a rejection, lower high, came up into the EMA ribbons, got a rejection, lower high. I'm not necessarily, I don't want to predict what's going to happen in the next 12 hours. I don't want to sound cocky or anything, but I think I'm pretty good at calling these macro moves. I've been calling for KDA to go to these lower price targets since 650, and I would like to highlight, I do not have a crystal ball. I'm very confident that KDA is going to be going to $1 in the macro time frame in the next couple of weeks. Do I know what's going to be happening in the next 4 to 8 hours? Absolutely not. So we could come up and invalidate this this level here at $1.76. But right now, as of this moment in time in the lower time frames, if we do start to push down from where we are at, this is once again a triple top lower high structure that we do have playing out on KDA right now, and I think this is going to allow us to move to the downside. Now, there have been many times in the past couple of months, really, that we've had these, trend lines. For example, this one here, I've already got it on the asymmetrical triangle that we broke down from, but we do have an uptrending level of support. We break down, here, we had an uptrending level of support in the micro time frames. We broke down over here. We had a pretty big, decent area of support in the mid time frames, and we broke down from it. And in the micro time frames, we've done the same thing again. We've started a rally. We've come up to the 13 EMA, which is probably one of the best indicators to look at, because every single time we come into the 13 EMA, for example, we crossed bearish at $6.92. Ever since then, rejected. Zooming in, fake out, massive push to the downside, fake out, massive push to the downside, rejected, and it's only been very recently that we've once again been rejected from this. I imagine if we extrapolate over, this would show that we didn't quite make it to this point in time. But as you can see, uptrending level of support has been invalidated. We've broke to the downside, come up into the 4-hourly EMA ribbons, and I do think the next leg to the downside should be playing out in the next 48 hours or so. Bear in mind, once again, I'm really not trying to call what happens in the next 8 hours. No one knows what's going to happen in the next 8 hours. These markets are very hard to predict in the shorter time frames, but at least I like to think that I'm pretty good at predicting what happens in these higher time frames, which is what I'm trying to do. And as you can see, the slightly higher time frames, this is still relatively short, but we do have a nasty head and shoulders panning out over on this chart here. And if we do extrapolate the price target of this, this should carry us back down below the lows. This should take us below the lows that we've got at 134, push us down to 132. We could potentially see something like this pan out, where we get rejected from the 13 EMA, get rejected, and then move down to my price target of $1. Now, $1 is completely unchanged. Now, I've been bearish since 650. I don't remember the exact time when I said $1 was my price target, but in the past couple of weeks, maybe the past month or so, since we were around about this range, I've been talking about how $1 is what I see coming into fruition. And since we moved our prediction in the last video at 193 when we were talking about this big breakdown, we were calling for a basically 50% drop, 48.5% or so. We're still down 15.5, almost 16%, even after we have had this pump. So yes, what Kadena is doing against Bitcoin is very impressive, but if I am buying KDA, I'm probably going to buy it against its US dollar valuation, because for me, KDA against the USD would probably be a good swing trade for me. Now, once again, I am very bearish in the short term. I do think we're probably going to get slaughtered as we're heading down to this $1, potentially even down to the 80-cent region, which is another massive level of support. If we zoom out, you've got a 1.618 correlation down here. You've got the previous, you've got resistance, flip support, flip resistance, got rejected, resistance, and then you consolidated in a bull flag, bullish pennant, something like that, as you blew up from the top of it. You've got a 1.618 right next to it. So there is a super high level of confluence and confidence coming in the market. Also a 3.618 at 90 cent. You've got a bearish breakdown target from this asymmetrical triangle right down here at 90 cent. It's a little bit hard to see unless we flatten it and zoom in. It looked a bit wonky when I drew it before, but as you can see, if we line this one up, it should be drawn like this. But as you can see, actually, oh no, it's not, because it's drawn from the wick up here. That's why. So You know, when you've got it drawn from the wick to the base, extrapolate it down, you can see this perfectly lines up with the 3.618 as well. So $1 as well, massive psychological level. So in my opinion, the most likely area for KDA to come down to is $1. I have absolutely not changed my price target whatsoever. You know, bear in mind the last time we made an update, I think we were somewhere around about here, 134. You know, we've had our move up. We're now putting in a head and shoulders. I do think it is probably time that we do start moving down within the next 24 to 48 hours. With that being said, how could this potentially open on Monday? Because looking at Bitcoin, I think Bitcoin is currently fighting to the death with its previous all-time high. And I think once and if we close a weekly candle below its previous all-time high at 19,800, it is going to likely cascade. Now, with the stock market opening, you can currently see this is going to open on Monday. If the dollar keeps on pushing up, and the dollar is super bullish right now. I mean, look at what we've done. You know, we had a massive run up into new local highs that we had not been to we hadn't been to these levels since I think 2002. So at this moment in time, yeah, you can see we haven't been at these levels for the dollar since 2002. The dollar is, you know, more bullish than it's been in the past 20 years. And, you know, I've had a very different opinion on the dollar in my channel. You know, while everyone was getting very bearish on the dollar down here, once again, if you're a seasoned veteran of my channel, you'll know exactly what I'm about to say. We've been telling you, do not count the dollar out until it's all said and done and it has its macro capitulation, because we did this exactly before. We made a mass capitulation and then boom, we had a massive blow off top for the dollar. And this is relatively what we've been calling for the past month, and we're playing it out to the teeth. We came down, formed a bear flag, everyone got super bearish. We found support on the daily EMA ribbons, had a massive run up into new local highs that once again we haven't been in for the past 20 years. We back tested the 618 fib, back tested the EMA ribbons, and now I think we're getting ready for a massive run to the upside. I think we're heading up to some pretty crazy price targets. Specifically what I'm planning on having it playing out to is moving up to around about this 110 range. I definitely think that could come into fruition for the dollar. So be super cautious. If the dollar keeps on moving up, which I do think it is going to do on Monday, the stock market is going to subsequently start moving to the downside. And as you know, stock market is highly correlated to Bitcoin. Bitcoin is likely to start capitulating below its all-time high as fear kicks in, as we've closed our weekly candle body below the previous all-time high. Tie all of these things together, and I think we could be setting up for a mass capitulation coming into next week. I believe a lot of the confidence that we've seen in the past week, which I believe is a dead cat bounce in the altcoin market. Obviously, you can zoom out on this, switch over to the Heikin-Ashi candles, and you can really see, I mean, this is what people are getting out of bed for. This is the performance, because, you know, I do have messages from, you know, my KDA followers, and, you know, I don't mind people messaging me. I love responding and talking to my community, but you know, sorry to put you on blast, but this is what a lot of you have been getting out of bed for. A lot of people have been messaging me saying, you know, I no longer think that $1 is going to come into play because of this massive bounce we've had on Kadena. This is the massive bounce in question. And, you know, once again, I really do think it's important that we zoom out, you know, switch up our perspectives, because you move over to the Heikin-Ashi candles on the weekly time frame and the bounce is non-existent. Even when you move over to the Japanese candlesticks, it's still, you know, very non-existent, just like this dinky little bounce that we had here before continuing to move to the downside. So, you know, once again, I'm not trying to put anyone on blast. You know, you know, people do message me and they say, you know, I no longer think we're heading down to $1. I'm really just here to, you know, let you know my opinion. I'm here to let you know that my opinion is completely unchanged, and I still do believe that $1 is the most conservative price target that we've got. So if I'm saying that $1 is my most conservative price target, then you might be wondering, you know, where could I think that it could head down to if it breaks below $1? Well, like I previously said, there's a massive area of confluence, 3.618 down here. There's an asymmetrical triangle breakdown target at 90 cents. And then we've got massive areas of previous support at this green box here, which also nicely lines up to the 1.618 fib, which is residing at $1.80, which is residing at 81 cents. Whereas the bottom of this support range is coming in around about 79 cents. And let me move this up a bit because I fat fingered it. But this is where I think we're heading down to. From where we are at this moment in time, I think we're going to continue, probably have, you know, once again, the most conservative price target would be a 39% drop. The most bearish, in my opinion, would be down here at about a 52% drop. So once again, I'm letting you know, I do not think the bottom is in. This is not the, you know, the bullish bounce that I was hoping to have in the markets, you know. And what I mean by that is, this bounce that we've got coming in on Kadena is absolutely not supported at all by any volume whatsoever, and we're already starting to trickle down. We're already starting to lose momentum. The oscillator that we've got running, which is the squeeze bomb, this is our momentum indicator of choice, has been relatively stagnant. And that is because, you know, once again, these are momentum indicators. So when you trend sideways, they're pretty much useless, but they are very, very good in the higher time frames when they do start to have their next flip. So right now, we're very, very flat. It's saying, you know, we're losing bullish momentum, but in my opinion, talking about everything else that we've got, talking about the fact that you are getting rejected from the 13 EMA, head and shoulders break down from this pattern, and also we're starting to trickle down from the 4 hourly EMAs. I think you pair all these things together, pair that with the fact that the Kadena against BTC has run into its 786 fib, pair that with the fact that on the Heikonashis, you know, these bounces that we're seeing are non-existent, I would definitely argue the trend is still your friend, and nothing has changed since my last video where I was predicting Kadena to head down to $1. So, you know, once again, we talked about this 7 days ago. Really not too much has changed. Our price target is still coming down. So, you know, this is, once again, still aging well. We have had that slight bounce, but nonetheless, even with this bounce since our last prediction, we are still down, you know, 16% or more. So be super cautious. Once again, I'm not a perma bear on Kadena. I don't dislike the project. I'm not saying it's a shitcoin or anything like that. I'm simply saying the chart is very, very bearish. Look at this objectively. When I look at my TA, I leave my emotions out of the chart and I look at things from as much of a robotic perspective as possible. I like to look at things from a mathematical perspective, using moving averages, using technical analysis. I do not like to look at the charts and say, okay, I really like KDA, I'm emotionally attached to this, so I'm just going to DCA whenever I feel like it's a good price. That is absolutely not how I do my TA. Once again, I look at things from as much of a mathematical and robotic perspective as possible, and because of that, we were looking at KDA when we were all the way up here at 650, and I was telling you, you know, sure, this has good fundamentals, it's probably going to be a great performer coming into the next bull run, but we are not in a bull run right now. We are in a bear market, and if you do want to survive these bear markets, then you should leave your emotions at the door. You should look at moving averages, look at things from a mathematical perspective, which is what we've been running through on this video. And as you can very much see, the trend has been your friend. All we're doing is having these dead cat bounces up, bashing into the EMA ribbons, and subsequently a couple days later, when you get rejected from these EMAs, once you don't get any volume coming in to push us any higher, all you do is come up, you have these bounces into the 13 EMA, you have your bounces into the 21 EMA on your EMA ribbons, and as you can see, every single time it's happened so far, we get ready for that next leg to the downside. So with all that being said, within the next, I want to say before the next FOMC meeting, so approximately within the next 39 days, I believe KDA will be down at $1, between $1 and 80 cents. This is kind of where I see KDA panning out to. This is where I kind of see the bottom playing out. But once again, I like to leave my emotions at the door. I like to look at things from a mathematical perspective. So while my emotions are telling me this is a good area to DCA KDA down here, I will be waiting for a trend shift from a purely mathematical perspective. I will not be looking at KDA and saying, oh, this is a great project, you know, this is a great fundamentals, let me buy now. I will be waiting for that trend shift, and I will be letting you know when that happens. But in my opinion, once again, wrapping up this video now, I've been covering KDA since 650. I've been very adamant. I've been telling all of you, do not buy KDA until we have a trend shift or we go to much lower price targets. That's perfectly panned out. So if you've been watching me for the past couple of months, you know, pat yourself on the back, well done, because we've all saved a massive amount of money by looking at the chart objectively and sitting on the sidelines. But I would like to say, if you do plan on DCA and KDA, I do not necessarily think it would be a bad time to start laddering in buy orders at 90 cent and potentially 80 cent. Am I going to be doing that personally? No, I'll be waiting for a trend shift. I would also like to see the FOMC start to backpedal and stop increasing the interest rates, because as far as I'm concerned, until the interest rates start to subside, the bottom will not be in. Once again, we've got our next FOMC meeting in about 39, 40, maybe 38 days or so. So once that comes into fruition, and once again, I do believe they're going to raise the interest rate, so that might cause a mass capitulation into that phase. I think this is the area where it's probably going to be a better place to DCA. But with that being said, I will be waiting for a trend reversal. $1 is still on the table and my most conservative target. So all I've got for you today for KDA. Keep an eye on the stock market opening on Monday. If the SPY starts heading down and the DXY continues to push up, we are going to see these lower price targets a lot quicker than expected. So all I've got for you today, as always, not financial advice, cowboy out, and most importantly, peace.